the options, and to choose the best option now out of hundreds of options. That is the challenge. So that is investment. And of course, for every investment, there is a challenge. Why? Because the amount which we have taken in the name of finance, that we need to return it. And then talking about the result of finance and investment, that is the earnings or dividend. That is very important. The difference between finance and every source of finance is having a cost. Every penny of rupee which we raise from the market or from any source is having a cost. So that cost has to be mitigated. That cost has to be met through investment. And we are investing our money, hard earned money, in some avenue that needs to be, that deserve to get some return. And that return must be more than the cost. And cost I define as the sacrifice of resources, the resources which we sacrifice. And when we talk of investment, the return generation on any avenue. Now, investment can be from the perspective of individuals, from the perspective of firms, from any perspective. The return on investment is one of the most important factor, guided by the risk which we are taking, the risk which is coming out, and risk should match investment. The return, if risk and return are not matching, there is a problem. Then coming down to the third portion, which I said, the difference between financing and investment. The difference between financing and investment. The outcome of our hard, initiatives which the firm takes in financing and investment, that is dividend. The decision over earnings. Who is going to share those earnings? So this is the functional definition of finance. And in this definition, everything is hidden. And innovations are taking in every sphere. So these are the questions which we need to answer before coming down to innovation, because innovation satisfies the need. If we are not able to satisfy that need, that cannot be innovation. And this is the constant tryst of mankind, of the mankind, to innovate things. Because if that desire ends, if that need ends, then we will be stagnated. And only thing which is constant in this world is change. That's why I say change is the father of innovation. So these are certain issues which I will like to put in front of you when we talk of financing decision. And then we will try to correlate with the basic fundamentals of finance, and then the innovations which are taking place. Innovations in banking, innovations in capital market, in money market, then innovations in digital currency, fintech companies are there, then these regulatory institutions are there, how they are evolving innovative practices, and the things which are changing in the background of us. They are changing so fast, but without having any pinch of noise. We are not able to listen that noise, but it is causing a great paradigm shift in the thinking, in the system. And what we were in financial terms before 20 years, 30 years, or even before 50 years, now that is all going to dismantle, so I will talk on those things later on. But first of all, since we are having participants from different backgrounds, so we need to talk on some level playing ground. And so these issues are there, like how the investment project should be financed. So I will first give you the basic definition. What do I developed as meaning of investment? And then see innovations, how innovations takes place in investment also. Now, when we invest in cryptocurrencies, don't you think that is an innovative investment? So investment is what? So investment is commitment of funds. Investment is commitment of funds for some entire need of known return, taking calculated risk. And how do we take and calculate risk? if we are able to calculate risk, if we are able to associate some amount of probability with the cash flows. Now, see, I'm going to have this much of return or that much of return. If we put our money in the stock market, my return is going to vary with the passage of time, or it may get doubled. Or if I put my money in some derivative instruments, they are one of the biggest innovations, in financial markets. They were there. They were there. Thousands of years, derivative instruments were there, but they were not formalized. Barter system is a derivative. So these are innovative avenues of investment. So how the investment project be financed? So for the purpose of financing of investment projects, we have different options. The firm has different options. Now there are startups. The big industrialists like Ratan Tata ji, he is financing. He has become as venture capitalist also. You bring an idea, and we are able to fund it. Idea has to be opportune. Idea has to stand with the test of the time. And creation of the idea is not an easy job. So a lot of startup schemes have been there, and investments are there. So how should the investment project be financed? In a phased manner, through shares, or through long-term loans, or there is any other mode of financing like crowdfunding is there, or the firm should, the individual should approach some kind of shadow bank, you know, going apart from the formal banking channels. So these issues, they need to be addressed. The pattern of investment, and if pattern of investment is clear, then one can understand with pattern of finance required. If our investment is going to be in for long purpose, for long period of time, like for 10 years, 20 years, then uh, we need to have the sources matching that. I cannot raise short-term funds for investing some fixed asset, which is going to be with us for 20 years, 30 years. I cannot take short-term loan like, working capital loan, or what we call it as um, the money market loans. So they need to match, and that matching is very important, and that is the job of the finance manager in a firm, that to match the investment with financing. The investment options are unlimited. If I give 100 rupees, to somebody, to some of my student, now if I ask what you are going to do with that 100, that a student will count hundreds of options. You can think of a big company like Hindustan Unilever Limited. Every day it is encountering thousands of financial transactions every day. And if it gets some funds as a loan, or as in terms of profit it has earned, it has not distributed it as dividend, then how many options will it be having for the purpose of investment? So investment, as I said, is a what we call commitment of funds for a relatively longer period of time, and for some known return, it is being and calculated risk is there. Then that's the way invest the investment project are financed matter, as I said just now. Yes, the way, like the pattern of financing and its matching with investment is very, very important. And in this whole concept, one thing is very important. That is what we call the wealth of shareholders, the return of shareholders, because ultimately they are the owners of the firm. They are the wealth. For them, the business is being done. And if the basic finance principle is that the business is done for maximization of wealth of the owners. And if the owner's wealth is not considered, then the functional decisions of financing, investment, it may go in vain. So the there has to be a proper matching between risk, return, and creation of value. So let me little bit explain what do we understand by value of value creation in finance, and then you will then we may try to connect with the recent things which are happening with the creation of value. Value is something which represents the worth of a company. The positive things which represent the worth of the company. Numerically, we calculate it as value of, the total capital employed in the business. Now, total capital employed in the business can be shown as the sum of shares and debentures. For those, who are not having finance background, let me tell you, shares are unit of ownership, and debentures or bonds are instruments of loan which the firm raises from the market. You combine them, you get the value of the firm. So that value has to be maximum, and if that value is maximum, then cost of getting funds from different sources, it will go down. Then does there exist an optimum mix, what we call as the financial structure or capital structure, the mix of different sources, the owner's contribution in the business which we call as shares, and outsiders contribution in the business which we know as bond. What should be the optimal combination between them? In 2008, when the global financial crisis happened, in starting from US financial market, the Lehman Brothers, one of the biggest investment banker in the world, its debt equity ratio, the debt is loan and equity in its own fund, it was 30:1. Can you imagine? The big managers of finance, they were handling the company in a way that only 1 rupee was their own and 30 rupee was a loan fund, debt fund. And that ultimately caused the spread of that bankruptcy of Lehman Brothers, caused the spread of this financial crisis all through the world. And these innovations, whatsoever financial innovations are taking place in different sectors, these innovations, they also lead to this kind of risk, the contagion effect, the spillover effect. Anything happening in one market, it is radially and without any time gap, it is spread in all other markets. There are companies in Indian market, they are getting funds from abroad. They are now, investor is not limited to invest only in Indian markets. There are many innovative instruments which have been, came in last few decades, like American depository receipts are there, ADR is there, where an Indian company is not restricted or limited to raise funds only from Indian market. It can go abroad. It can go to US capital market, issue its shares there, not directly to the investors, but issue shares through some custodian and get funds from there. And there is no restriction on bringing funds inside the country. There is no restriction. So those valuable funds can enter in Indian market. The company can use those funds. We call it as ADRs. There are many companies, Indian companies, more than a dozen companies since last 20-25 years. Those who entered in US market and raised funds, like Infosys is there, Reliance Industries is there, Wipro is there, SDFC Bank is there. So many companies are there. And we call that instrument as ADR, American Depository Receipt. Similarly, if US market is not, doing good, the companies can go like in Luxembourg or London Stock Exchange. They can issue shares there for getting funds. We call it as in general GDRs, Global Depository Receipt. In the same way, if a foreign company enters in Indian market, because this is a global village, the technology is converging, the whole world. And the foreign company can also come and raise funds from Indian capital market or the different sources. But the issue is that how many companies they have been successful in doing so? Only one company, because our capital market is not that matured, or we are traditionally capital deficient country in comparison to other countries. So these are the issues, these are the instruments which are coming up, and they have been evolved with the passage of time. And this has compelled the policymakers, the regulators, to free the markets in terms of flow of money, because it's the finance which is blood of any business. Without finance, the things cannot excel. And that's the old saying, money creates money. Without money, we cannot think of. So money has to be there. It should be raised from any instrument. Let the market do its own job. Why it should be regulated? So then the whatsoever the optimal mix is there, what policy should the company adopt for designing its financing policy? As I said, from foreign market or from Indian market or from different sources, different platforms are available. From there, it can raise. But the basics of all these things is the time. Time is very important. The $1 of today is not equal to $1 of tomorrow. The time value of money, with the passage of with the passing of time, the value of money goes down. Now that is shown in the next slide, which we call as very important fundamental principle in finance, the time preference for money, which is very important. And with the passage of time, the value of money goes down. Why this happens? This happens with the basic, what we call as basic thing, that with the ever growing population, the demand is increasing. Demand increases the inflation. And if inflation is there, then of course the prices are increasing, and if prices are increasing, then the value of money goes down. And this decline in the value of money gives the gives rise to the return. That return, it discounts, it nullifies the decline in the value of money, the depreciation in the value of money. $1 of today, as I said, is not equal to $1 of tomorrow. We have all different kinds of instruments, which are going through regulatory, supervision. Like Indian currencies under regulatory supervision, monetary policies are there. They have been designed. They have been, changed. We are seeing the changes which are taking place in those monetary policy. But they are not able to curb the inflation. Of course, they are there. Inflation cannot be curbed because inflation is must for the economy. Some walk-in inflation is there, because if inflation will go away, then the problem is that there will be no motivation for investment. There will be no motivation for earning profit. So that is very important. Inflation has to be there, but it needs to have some kind of control over it. So when I say time preference of money, time money is, it loses its sheen, it loses its value. So is there any way out? Is there any way out that this can be stopped? This can be stopped, like in the regulatory environment, the rupee controlled by Reserve Bank or dollar controlled by Federal Reserve Bank. I know that is not possible. They will cause the decline in the value of money, and they will compensate that with printing of currency or through their monetary policies. But this is the digital world. Through cryptocurrencies, this can be stopped. This decline in the value of money can be stopped, because that is speculative market that I will discuss later on, those cryptocurrencies. So this time preference, this leads to the another concept which we call as, the required rate of return. That is in the next slide. That this return has to match with the time preference of money, the decline in the value of money. And this is the crux of every innovation. This is the crux of every innovation. The continuous search for better return, the continuous search for decline in the expenses and the cost. Let me take example of inventory management practices. There was a time when manufacturing practices which were emanating from Japan, of course cryptocurrencies, they also started with Japan in 2008. But the people have a lot of doubt who is the creator of that, whether that person was actually in real or fake, that no one knows. But most of the manufacturing facilities, the Japanese economy was totally destroyed with the onslaught of Second World War, but they stood with a lot of innovations, and particularly one very important innovative practices which they have adopted. It was in their manufacturing sector, in automobile sector. And now you see most of the automobile companies, Japan, I know, is a primarily a market, or it's a primarily a country which belong to those multinational companies which are highly technology driven. And the manufacturing facilities, assembly line, everything, they have been evolved in US, but very efficiently and effectively applied in Japanese assembly line, the way of manufacturing. So many Japanese companies, they have excelled in automobile segment of the globe. Toyota is one of them, and Toyota is responsible for many innovative inventory management, inventory control practices, like Kanban is there, Six Sigma is there, Gemba Kaizen is there, where they have treated inventory not as an asset. Traditionally, we used to put inventory in our annual balance sheet as an asset, but normally they take inventory as an expense. That is the innovative way of thinking, innovative, because if we take this as an asset, we may have a tendency to carry with inventory. But if the day we are taking it as an expense, now companies are working on zero inventory level, and if inventory could be nullified, now for that purpose there has to be a perfect market, there has to be perfect convergence of the technology, only then it can be possible. But that seems very difficult. Those who are from finance background, they must be knowing zero inventory level. It depends on the nature of the industry, but it is almost very difficult, very difficult. But if that has to be achieved, now that has to be a kind of vision statement for any production department. We are going to have zero inventory level, and inventory is a cost, inventory is an expense, because if we don't take it as an expense, then the firms, they are operating on razor thin margins. They don't have much amount of profit to talk about. And if they are going to reduce down the cost further through reduction in the inventory or nullifying the inventory to zero level, then what will happen? The working capital, the net working capital will also become zero. Now, working capital is what? Operational capital, which is required by the firm to run its normal operation. And why I'm saying the net working capital, primarily, in accounting language, we say it is difference between assets and liability, current assets and current liabilities. Now, those who are not from finance background, I will like to inform, current assets are the assets which are with the business for one financial year. They will be converted into cash within one financial year. Current liabilities are the obligations of the firm which it has to pay off or meet within one financial year. So the difference between them we call as net working capital, and that has to be, what we call, that has to be optimal. If we are maintaining surplus, net working capital, then we are blocking our funds. So the things are changing, the mentality is changing. We should reduce down net working capital to even zero, even the zero. Why we should maintain some extra, a single penny extra stored with the, with the treasury of a company? That is a wastage of money. That is wastage of money. It should be properly and optimally utilized in the business. Every money has to be, spent in the organization, for creation of the profit. And if we are not able to employ money in the business, the money is lying idle, then that is the worst crime one can think of, financial crime one can think of for a business. That is the worst financial planning. So uh, these innovative inventory management techniques, they have evolved, like just in time. The raw materials should arrive in the company as and when they require. Why we are maintaining raw materials or components or inputs, huge stock of that? Because in Japan, it is not possible for companies to maintain huge inventory, because in Japan there is dearth of land. It's not US, which is huge country, humongous, size of US. But Japan is a small country and densely populated. So there the companies cannot afford to have, what we call a huge amount of inventories spread over the courtyard of the factory and so on. So they have evolved these practices like just in time, the raw material. And Japan is a country where there is total scarcity of what we call natural resources. You don't have natural resources. Primarily, they are dependent on import of these component or raw materials. But they have evolved a system where they get the raw materials in time, and due to that, largely they were able to reduce down the expenses on inventories. These innovative, and apart from that, these inventory management techniques, apart from these inventory management techniques, it is very important to match other functional or issues which are related with the value chain analysis. Inventory is one of them. So as I said, we must understand the flow of money, how the money flows, the pattern of money flows. The money can, take different shapes, but we must match the time preference of money with the return. And let me come on to the slide, present value of a cash flow. This is very important, and whole of financial innovations are based on this particular factor, which I am showing at present. It is present value. I think it is on the next slide. Please, present value of a single cash flow. And you see, this is the present value. The money which we are going, if I say I give you 1 crore rupees 10 years later, you give me 50 lakhs today, is immediately you start analyzing the deep neurons in your brain. They will analyze whether should I give 50 lakhs or not. Will 1 crore rupees is equal to 50 lakh rupees of today or not? So these are the fundamental issues. If we are not able to, if the algorithm is not supporting this, then this kind of decision cannot take place. Should we go for some kind of every year payment or a receipt, or it should be lump sum like annuity kind of thing? Annuity, like this annuity is one of the biggest wonders of the world. Somebody said, compounding formula, compounding interest rate is the eighth wonder of the world, because it has an impact on most of the investment and financing decisions. Compounding, simple interest is nothing. It is the compounding which is the eighth wonder of the world, and annuity is the ninth wonder. Annuity is the response, is the basic series of cash flows which you pay or you receive, and that is responsible for all the 0% zero interest rate loans which we get from the firms, or whether you take a personal loan or any loan. They are all marketing gimmicks. Those who are from prime finance, they must be knowing there is nothing cost, zero sum game or anything free. If we are they taking anything free, then we become the product of the company. We become the advertisers for the company. We advertise the company freely without any cost. So when a company says purchase this product on zero interest rate scheme, everything is hidden in the annuity. What they are going to take you on monthly basis, that is very important to understand. So this annuity is one of the biggest, wonders. And most of the financial, schemes, you talk of insurance, endowment schemes or term loan schemes, they are based on these annuities. We take, auto loans, we take personal loan, they are based on these annuity schemes. So this has brought really, great change in the financial markets. This annuity, the basic concept of this one. Then coming down to this leveraging portion, one very important thing is the financial and operating leverage. This is the next portion of what I want to give you, the basics of the finances, the leverage portion. Can somebody, yes, it is next, yes, operating, next slide. When we talk of this leverage, Archimedes sometimes said in the past that uh, if I am given proper base and fulcrum, I can, and a rod, I can even lift the earth. So leverage is another wonder in financial management, in finance, that if we are not using the loan, if we are financing only through our own money in the business, then it might be possible that our returns are not maximum. So let us involve outsiders money in the business. If outsiders money is involved in the business, then we pay the interest on it. And if interest is paid on it, then interest is tax deductible. First we pay the interest, then the on residual amount taxes are paid. So what happens in the whole process is that our tax burden goes down, and the profit which is remaining, it is shared amongst the lesser number of owners. So owner's profit gets maximized. So we call it as financially leveraged. Then corresponding to it is operational leverage. That is the cost structure of the company. The cost structure of the company says that if there is involvement of fixed cost, then what may happen? The the profit of the company can be maximized, because there may be two options. We can add a fixed cost with new machines or new buildings, everything is new, so we can do business with all these new investments. Our fixed cost will go up and variable cost will go down. Variable cost means the operational cost, like raw material, labor, and all these costs are there. So that will go down essentially. But another, opinion is there that let us start business with some lower investment in fixed costs. Take second-hand machines or second-hand buildings, and then uh, maybe for initial years variable cost may be more because of the old machines. Maintenance cost may be higher, so initially we can what we call it as the total maintenance cost may be high, but the firm can survive in that. The chances of survival is more. So that is very important to decide for the startups, that what combination they are going to have for operating for this fixed cost and variable cost. Then now I will, that after going through these basic fundamentals of finance, I will not go in the deep of it, because you the participants are from varied background. Now I will like to come down to the innovation slide. Connect innovations with finance. Finance and financial innovation has become the buzzword today. So I will request to please come on to the slide of innovations. Now, this I have defined in my own way, doing existing things in two ways, as I said, for some tangible benefit or outcome. Now, in finance, doing existing things in a new way. Financing is there. Financing is there. The basic thing is that we need money. So, from where we can raise funds? Like, two markets are there: capital market, money market is there. From those two markets we can raise money. Different permutation combinations are there. I have given you glimpse of certain instruments, like ADRs are there, GDRs are there, IDRs are there, Indian depository receipt is there, American depository receipt is there, global depository receipt is there. Then, so all these are, basics of that they are existing, but the continuous evolution has resulted in these in the total shift of these instruments. Now these instruments have taken a new shape. So that's why I say doing existing things in new ways for tangible benefit and outcomes. Next slide. So when we talk of the financial innovation, there can be a financial market innovation. Next slide, please. Financial instrument innovation and general financial innovations. So here I will deal in detail with financial market innovations. What do we understand by financial market? Now, financial market is foreign exchange market, is commodity market, it is share market, stock market, it is derivatives market. So a capital market, money market, you can define it in a number of ways. They are all financial markets. And to summarize all the innovations that have taken place in all these markets, it is humongous. It is very tedious, but I will give you the glimpse of certain financial market innovations which have taken place in last few years. Like, there was one very important innovation which has resulted in majority of gain to investors in share market. And if time would have permitted, I would have shared some story with you regarding the the stock market success and failure of last so many years. You see, with the onslaught of this pandemic, stock market has gone down. The stock market has gone down from 35,000 to 25,000. That is in 20 last to last year when this started in April. We saw there, and then V-shaped recovery. What has happened during those 2, 3, 4 months that the stock market went down and then recovery took place? Ultimately, people have money, they have to invest it. And the instruments which are there, they have to adopt those instruments. They cannot adapt those instruments. They cannot change those instruments. They have to adopt at any cost. So that adoption is compelling them to invest in these markets. The interest rates are going down, so they have only these instruments to invest. And when we say the reasons why the market has gone down or market has gone up, you don't have control over that. The control is of regulators and the companies, what they are doing. And do we have any other option to invest or to look on these markets? Yes, we cannot have like no one can compel us to take loans or raise finances only from Indian market. We are having foreign markets. Is it correct? Is it not correct to say that is rupee available only in India? Rupee is also available in foreign countries. Rupee is deposited in the banks of foreign countries also. Rupee is not only deposited in India. But who is the regulator of rupee? It is the RBI. RBI. And that is a centralized system. That's why we call them as central bank. They regulate it. But now the things are changing. They're not the regulators. They are the facilitators. Facilitators of rupee. You know what is happening? There is a huge reserves of rupee which is also deposited in the banks other than India, and we call it as euro currency, euro rupee. Rupee, or most profoundly, if you could not associate rupee with euro, we can call it as euro dollar, the dollar deposited outside the banks of US. And there was a time in the history that the total dollar deposition uh, deposits were higher than the dollar deposits in US market. Can you think of? So the name was started, was coined euro dollar. So euro is not a currency here. Euro is not, this prefix is not a currency of European Union, which they adopted in the year 1999. Euro has been the prefix of one of the telefax number of BNP Paribas. BNP Paribas is a multinational bank of France. So it had euro, it was the alpha because the telefax number contained alphanumeric codes. So that was alphabet euro. So from there came the concept of euro dollar, euro currency, and this resulted in those markets which are highly unregulated. Those markets are because RBI can frame policies for Indian currency in Indian market, but the Indian currency which is deposited outside India, the RBI cannot frame policies for that, or the dollar deposits which we are having. Yes, anybody? Okay, the dollar deposits what we are having in India, our foreign exchange reserves are increasing day by day. It has reached $600 billion. So those dollar deposits can US and the hard currency of dollars which are maintained with Reserve Bank of India, can Federal Reserve Bank of US make policy or regulate those reserves? No, it is not possible. It is the bank which prints that currency that can regulate the currency, no other one. So it is not possible. So the rupee deposits which are there with foreign banks in London financial market or in New York or in Tokyo, the Indian companies are approaching them, and every regulation is a cost. So if you take money from Indian financial markets, capital market, they are highly regulated, and as I said, regulation is a cost, and those markets, they are unregulated because Indian currency cannot be regulated in US market. RBI cannot frame policies for regulating Indian currency in British market. So their companies are approaching and they are taking loans in Indian currency and bringing it to India. Transfers are there. So that is one very important change which we have observed in last few years, where the instruments have been used. Then in few of the further innovations which have taken place in financial markets, like apart from the normal equity, we have seen that like private equities, hedge funds, then pension funds, they have emerged a lot. Um, the what is private equity? This is a very innovative instrument for getting funds. private equity, like public equity. Public equity means the shares which are traded in the stock exchange. Those shares can be purchased and sold by anyone. So whatever the shares they are there, they can be bought and sold. But private equity are, they are the equities which are issued by private companies, and they are not listed in the stock exchange, so they cannot be traded, and they are purchased by what we call private equity investors, angel investors. And those private equity investors, they charge some fee of that, they get some return to of it, and whatsoever the return is there, that is shared. But they have limited liability, so we also call them as limited liability partners. LLPs, we also call them limited partners, because their liability is not unlimited. Their liability is limited to the extent to which they have invested in the shares of the company, uh, uh, through private placements. So private equity has emerged a lot. Many companies for them, because you can think of, there are almost 7-8 lakhs companies in India registered with Registrar General of Companies, and out of that only few thousand they are listed. So many times the thought may be coming that how other companies are raising funds through equity. So the private equity investors, they are putting money. Then hedge funds are there. Hedge means these are very innovative funds. Now hedging is primarily means the managing of the risk. When there is a variability in the cash flows, the risk comes. So it helps in managing the cash flows. And if cash flows are managed in a proper way, then hedge funds, and there are many hedge funds where they manage the risk of investment in stock markets. We are seeing hedge funds are investing. Apart from that, they are also partnering with different companies. Then pension funds are there. And overall, the stock market investment, it has evolved during last so many years in such a way, and various instruments have been launched, various instruments have been applied, that the investors can gain from it. So few of the innovative instruments which may be of use to everybody who is not part of stock market. See, I'm not the propagator of investment in the stock market. I have burnt my finger uh, many years back. I entered the market in 2003, when market was 2000. The Bombay Stock Exchange Sensex was 3000, trading on 3000. Now uh, it is around 60,000, say 50, 57, 58,000. So almost there is a growth of 30 times in last I think 18, 20 years. 30 times is the growth. So you can easily imagine the growth in the wealth of the shareholders, those who would have remained invested. They would have perseverant, they would have patient, and they must have tasted the fruit of the return on investment, or remaining invested in the stock market. Like there was a time when delivery based trading used to take place. When we used to put our money in the stock market, the stocks were delivered to us. It took 1 week of time, but with the onslaught of technology, everything is being done on in seconds. You need 3 4 different accounts, like demat account, savings account, trading account, and so on. So you, with help of all these things, you can do the things in seconds. So a few instruments which have been evolved, like derivative instruments which are applicable in the stock market, that I would like to mention here. There are many other instruments, but due to paucity of time, I cannot touch that. Some of the important derivative instruments which are there, like options contract is there, futures contract is there. Of course, in foreign exchange market, there is applicability of forward contract. That's a very innovative instrument through which the exporters and importers, they try to minimize their risk. They try to streamline their cash flows through forward contract is a contract between two parties, where one party agree to sell and other party agree to purchase the underlying asset at a specified rate, date, and time. So therefore, and that's a very, very important derivative instrument. and they are used profoundly in the field of foreign exchange market, since that is not over the counter contract, so it cannot be used in the stock markets. In the stock markets we have futures contract. Let me give a glimpse of it with help of a small illustration. You will be able to understand, those who are not having the background of finance, the how this futures instrument is used in the stock market. Now let's suppose if you want to purchase a share like Hindalco, Hindustan Aluminum Company, the price, and if I want to purchase futures of Hindalco, it is available only in lot sizes. Lot like 750 shares may represent one lot. 750 shares may represent one lot. So if I am purchasing one lot of Hindalco share, then I have to pay only 150 rupees. And if the lot price appreciates from 150 to 155 rupees, then my profit is 5 into 750. That is, I think, 3,750. So that is my profit. That is my profit, and my investment is only 150 rupees. On that I'm getting profit of 3,750. But that is not the scenario. There may be loss also, and that loss may be also in the same proportion in which we are getting the profit. So if the price went down next day from 150 to 145, then there is a loss of 5 rupees per share multiplied by 750 shares in the lot. So 750 into 5, again 3,750. So I invested only 150 rupee and my loss is 3,750. So this is a very peculiar kind of contract. I will not go in much detail of its settlement and how it is being traded. So that's a future contract. Then can you imagine you can earn from the declining market? If market is declining, yes, we can earn. Now that's a very innovative instrument. We call it as options. We call it as options contract. So if market, like suppose it's a contract. If I struck a contract with the exchange that I will sell my shares if the at 50 rupees, at 50 rupees, okay, and that's a contract. And if prices go down like from 50 to 45, since I struck a contract at 50 rupees, so my profit is there. My profit is there because my the stock exchange is having a contractual obligation with me to purchase shares at 50 rupees, and I will be selling shares at 50 rupees in spite of the fact that the market price of the share has gone down from 50 to 45. So in the declining market, you can also gain. Now, various instruments have evolved. So I have given a glimpse of very fundamental instrument. That is options contract. Similarly, when markets are increasing, yes, you can again gain. And for that purpose, we can purchase different options. Options are of different types: call option, put option. So these are the instruments which have evolved in last so many years in the stock market, and through which it has created so much of speculations in the market that people, they have lured, attracted towards the stock market. And if you see the number of demat accounts which have been opened in last 10 years, that is exorbitant. That will open our eyes like this. Okay, these number of demat accounts have been opened. Now number of savings bank accounts, they are decreasing, because now earlier people used to maintain 5, 6, 7 savings bank account, but now everything is traceable through your PAN card. So only one account is sufficient. So I know very sooner or later you will be known by only one bank account number. So you will be having one bank account number. The banks are merging, restructuring is taking place. So that is about money market. So that I will touch later on little bit. So that is capital market. Share market is there. And one very important innovation which has also taken place in capital market, primarily in the issuance of shares, is book building method. Book building method means earlier, when a share was issued in the market, the price was fixed. Whether you agree to it or you don't agree, you have to purchase. If you want to purchase, you make an application at a specific price of 100 rupees or whatever the price is being mentioned by the company, you need to purchase it. But this book building method, it has given a range, a band to the investor, to the potential investor, where potential investor can bid for purchase of shares. And if most of the bidding is done on that particular price, then the shares are allotted there, allotted at that price, and then they are listed and trading starts. So this is another change which we have seen in last few years, 15, 16 years in the share market. And then if you talk of coming down to the other instruments like in equity or shares and then bonds, little bit I will also like to give you the new kind of innovations or the innovative instrument in bond market. In bond market, bond is a kind of loan instrument. It's a kind of loan instrument where the companies, they raise funds through these fixed charge securities. And the bond market has also seen that, and there is a lot of maturity in bond market in India also. It has came very late. The bond market is not that matured as we see in case of US market. In India, the banks are not that much closely related with Reserve Bank. Then the banks in US, they are related with their connected with their Reserve Bank very closely, because of the historic reason that in India, the savings rate is typically very high in comparison to US market. And the banks in India, they get easy money. They get easy money from the public, because now they are not going to get easy money because the time is changing, innovative instruments are there, so we don't have those traditional instruments of saving, like put in fixed deposit, go to the post office schemes. We the slowly and gradually, as and more and more a portion of our population will come out of those traditional middle class hiccup, and per capita income grows, then people will gradually transform their investment from traditional savings schemes to securities market. So in bonds, when we talk of bonds, we have convertible bonds. Convertible bonds are like if any time you want to convert your bonds into equity, so after some number of years, the company give you the option. So simultaneously, you are investing in bond as well as in equity. Initially, you are having an option to invest in bond, but after some number of years, 3, 4, 5 years, the company will give you an option to convert your bonds into equity. So we call them as convertible bonds. Then there are like euro bonds. Euro bonds are bonds like a foreign company comes in India and raises bond not in Indian currency, but a currency which is not of Indian origin. So it may issue bonds like in India in dollars. In dollars, like in any Indian company can go to like Japan, it can issue bonds there in US dollar. So that we call as euro dollar. So that is the recent changes which we are seeing in the bond market, that companies, they are not only restricting the issuance of bond in their domestic market, but they are also entering foreign markets in the currencies which don't belong to that country. So we call those as euro bonds. And then foreign bonds are also there. Foreign companies are coming here and issuing bonds here in Indian currency. We call, with the origin of the company, we call it as a foreign bond. Then domestic bonds are there. Then we have perpetual bonds are there. Perpetual bonds means the bonds which exists as long as the company exists. You get a fixed amount of interest rate. The investor gets the fixed amount of interest rate on the bond investment every year. So we call it as perpetual bond. Then there is another option, non redeemable bond. Means after certain number of years, the principal amount is being given back to the investor. After certain number of years, the principal amount is given back to the bond investor, and throughout the duration of the bond, the investor gets the interest payment every year. That we call as redeemable bond. Then there is also another bond which we call as, these instruments have been devised. These instruments have been innovated as per to suit individual investors' requirement. Every investor is different from other investor. So what happens that Whenever investor is having some requirement, the companies they devise new instruments. Similarly, there is another instrument which we call as zero coupon bonds or deep discount bonds. Deep discount bonds are those bonds which don't carry any amount of interest on them, but initially they are issued at a discounted price but redeemed at the value of the bond. So if the value or the price of the bond is 100 rupees, they are issued at 70 rupees, 60 rupees at a discount. But later on, after the end of the tenure of the bond, that is 10 years, they are redeemed, they are repaid back at par. We call them as the value or the original price of the bond, par value we call. So they are redeemed at par. So we see, I may not be having sufficient amount, but I want to invest in the bond. And during the years, I don't want to have a fixed amount of return. So there is an option for you. So you are having money. You tell your requirement. We will devise instrument. So you can see these number of instruments, how they have evolved. Now there are many other, like foreign currency convertible bonds, multi-currency bonds, samurai bonds, Yankee bonds. So thousands of bonds are there, and if I go on counting, I can take a class of whole day on the types of bond which have been innovated in last so many years. If you have money in the pocket, I will devise an instrument to take the money. Similarly, in case of equity also, now equity, they are not limited to only normal shares. The equity are registered stock, they are non-registered stock, they are sweet equity, private equities there. So many equities have evolved during last so many years that if you have shares, you want to invest in the through the mode of shares. Let me give you an example of a foreign company known as Nestle. Nestle is a multinational company, and Nestle thought that is it possible? And Nestle is a Swiss company, and 99% of its owners are Swiss nationals, but 99% of its revenue it gets from outside Switzerland. 99% of its revenue sales it is getting outside from Switzerland, not from Switzerland. So, but it wants that its ownership should be intact. It should not be diluted, and only Swiss nationals can purchase shares. But due to this, it restricted the number of investors in the company, and because of that, the cost of capital of Nestle was very high. And due to that, the return to shareholders or owners it was compromised. So it thought, what we can do, what could be done to attract more number of investors in the company. So they devised a share where the share can be there, but they don't have voting rights. They don't have voting rights. They can get the dividend. So many investors, like retail investors, we are retail investors, and if we invest in a company, our primary motive is to get the return. We don't want to participate in the policy decisions of the company. We don't want to go in the annual general meeting of the company to give or to cast our votes. No, the postal ballots are there now. Company have different modes through which they can take opinion. So most of the retail investors they don't want to go and give their opinion over the policies of the company. Rather than they are more interested to get the return. So if that is there, so they allowed the investors to purchase shares which don't carry voting rights, and they call those shares as bearer shares. Bearer shares, B-A-R-R-E-R. Bearer shares means just like currency note is a bearer note. I am the owner. If I am owning this 100 rupee note in my hand, I am the owner of it. If you snatch it, it becomes yours. Those who bear, they are the owner. Similarly, this is a bearer share, and they are not recorded. If you are holding these bearer shares, you are the owner, you will get the dividend, and the prices are appreciate. So see what kind of innovations they have done with the various financing instruments, and for that we have seen the changes, the differences in the stock market and the money market. Now coming capital market and the money market. Now coming down a little bit about money market. In money market, I would like to touch more of this foreign exchange market. In money market, the prime premise is the creation of the interest rate. The regulator is RBI, and I foresee that with the with the recent changes which we are going to see, in which we are undergoing. This, see, change is a constant, which every time it is, and it is there. But sometimes we feel, sometimes it is spontaneous. We don't even feel that change is taking place. Just like our age is passing by, we don't feel it, but we can, just look, by looking at the mirror, that our age is, our skin is wrinkling, and our hairs are becoming white. So various, indicators are there, but we don't feel that our age is passing by. Similarly, Reserve Bank of India, now you, it may seem weird if I say that in coming years it may be possible that even the employees of Reserve Bank of India may lose their jobs, just like banks. In last 10 years, can you imagine, that 50% of bank branches have been closed? Closed means they have merged. And why they have merged? So I will talk a little bit later on. So when I say the existence, because it is not centralized, it's not an era of centralization. Digitalization has compelled decentralization. It has empowered every Indian citizen equally. Now the convergence is there. It is not my money, I should be owner. I should be the person who should decide how much interest I'm going to charge if I pay to somebody. So that is the basic philosophy which is governing the times. And when I say Reserve Bank of India regulates money market, to what extent it is regulating in normal days, one cannot feel it. Reserve Bank of India is controlling money. I'm having my money in my pocket, hard-earned money. And if Reserve Bank of India comes and says that, okay, you give it to the bank, they will give you 2% of interest rate, how bad it is. Now, there was a time when no one can even think of that. Even the central bank and banks are exploiting us. And who likes to go? If this lecture would have been in a physical mode, I would have asked that how many persons like banks? बैंक कितने लोगों को पसंद है? How many persons they like bank, and banks, they have become evil. Please don't take it otherwise. If some persons belong to banking background, they have become evil. We don't like to go banks. So Reserve Bank of India is the regulator of monetary policies or money market in India. How long we are going to see shadow banking has come up, crowdfunding is there. Now, to what extent are they controlling that? No, they can control only the currency which they are printing. And here we are not dealing in their currency. It's a cryptocurrency era, and for next, after a few years, it will be NFT, even not cryptocurrency. So the things are changing with a pace which we have not ever experienced in the past. That everybody has to understand. And this is the biggest, as I said, technology is the biggest equilibrium. It's the biggest equalizer. There is no need of, there is no need of having something like, regulatory system kind of thing. Who regulates money? The time has gone. And okay, you may differ from me that it will take some time. Yes, it will take some time. Innovations take some time to settle down. So I was talking of money market. In foreign exchange market, I was talking because that has seen so much of innovations in last years. Can you imagine foreign currency can be traded in the market? Yes, in last 10 year, NSE has started trading in the foreign exchange. Four major currencies are there where you can trade in the foreign exchange market. Arbitrage system has allowed trading in the stock exchange, trading in the foreign exchange market. Although foreign exchange market is an OTC market, over the counter market, it exists online. It exists online where you cannot, go physically. There is not a same a kind of, building where currency is traded. Now in India, if currency is available at 75 rupee, it may be possible. In US, it is available at 76 or 74. So the rate may differ. And because of this difference, arbitrage happens. And arbitrage means buying and selling simultaneously in two distinct markets, taking advantage of price differential, taking advantage of, and this does not carry any amount of risk. Like I can purchase shares from NSE and I can sell it in Bombay Stock Exchange. So I was telling those instruments. So those innovative instruments must have practicability also. And if they are not practical enough, then they will not be used by masses. They will not be used by masses. And if if there is practicability, then no one can stop, because they are if government has not regulated it, then it will start making regulations of it, because government starts making regulation mostly on those things which are popular. Which are not popular, government even don't bother about that. So uh, like I said, forward contract. Forward contract is being used by the hedgers. Hedgers means exporter, importer. Anybody can be hedger. Those who want to streamline their cash flow. Where removing variability in the cash flow is very, very important, because the chances of loss, that is not risk. We don't know that loss is going to happen. There is a risk. We are able to ascertain some probability out of it. So that is very important. That is very important, that if we are able to associate probability with the occurrence of any amount of cash flow, then there is no risk. There is no risk. And most of the financial innovations which are taking place, they are removing this kind of uncertainty which was prevailing earlier, because of existence of single authority, single regulatory system, whether it is SEBI or Reserve Bank of India or IRDA. You can see, you can critically analyze their role. I personally, I'm the biggest critic of these regulatory institutions. They have done not much better but more havoc with the system. And you see, and they have not equal, they have not created level playing field for every firm, every individual who is part of this country. They were biased. So no, this is my right. I can criticize. You may differ from me, but I'm putting the different side. I can even appreciate their role, but we must be because we are researcher, we are student of management, so we must put a different side of it. So I'm putting it as that, as the, like as I said, forward contract being used by hedgers, but only there was, this is a result of a survey in India. Only 14%, 14% of exporters use forward contract. This contract is very, it's a almost riskless contract. There is no risk involved here. You can know from day one how much exchange, how much currency I'm going to have, because of fluctuations in the foreign exchange market. This creates a lot of risk for exporter or importer, that if when I'm going to convert the currency, whether the exchange rate will be favorable to me or not. So this foreign forward contract helps in removing that risk. But still see, people, they don't go for it because of its practical problems. There's so much of complexities involved. People, they don't know it about much. Then coming down to this second instrument, which is very popular nowadays among the large banks, which we call as the swaps. Like if I have taken interest a housing loan. Okay, I'm taking a housing loan. On a housing loan, I have taken on fixed interest rate. And in coming days, I saw that in coming years, I saw that market is going down. There is a depressionary trend in the economy. Recession is going on in the economy. Is it possible for me to take advantage of the decreased interest rate? That it means you want to go for some floating interest rate. You can not only port the companies, now you can switch over your interest rate from fixed to floating, or floating to fixed interest rate. We call it as swap. The principal amount will be same, the amount which you have taken a loan, but because currency has to be same, but you can change fixed to floating or floating to fixed. And from where does the floating interest rate comes? Primarily, we take the reference of floating interest rate from not RBI. We take primarily it from foreign markets like London financial market, which is one of the biggest financial centers of the world apart from New York or Tokyo. So I was saying about this swap. So if I have taken a fixed interest rate loan, then I can switch over to floating interest rate loan. Floating interest rate loan can be switched over to fixed interest rate loan, and both the parties, those who are swapping these interest liabilities, they may gain out of it. They are having the gain. Now, I don't have the time to show you the illustration, but yes, both parties, they gain those. So we call them as swap. So that is very much popular. That has become popular. And this swap is, this market is also one of the creators of interest rates. This is one of the creators of interest rate, which you might have heard about LIBOR, London Interbank Offer Rate. And now these are floating interest rates which take place on quarterly basis. Okay, so these things are there in foreign exchange market, in money, which is of course a part of money market. So when we talk of financing, these things we have experienced during last so many years. Then coming down to investment, investment is my favorite topic when I say, because financing is what something that is easy to understand and easy to get. Now you may differ from me, sir. Financing, it is paid pe paise nahi lagte, money is not grown on the trees. But I say yes, money can even grow on trees. I have seen that, I have experienced that, but I lost those trees. The problem is that I have lost the address of those trees. Those trees have been stolen. I have grown money from on the trees. Instruments are there. I will show it. Money grows from the tree. Only thing is that you don't know where are those trees. So investment is important. Investment for me, investment decision is very complex, and for that, various innovative, techniques are there to sort out investment. You can look at the return from different perspective. You want fixed return, you want variable return, or the investment option should be, for any higher amount of risk you take or lower amount of risk you take. As I define, because this is my copyrighted definition of investment, only these participants they can come to know. Investment is commitment of funds for relatively longer duration of time for some known return, taking calculated risk. So that is investment. And normally people, if even if we put our money in the stock market for 2 days or 1 month, we call it as investment. No, that is not investment, that is speculation. So investment is something where we take calculated risk, and various algorithms have been developed where you can specifically pinpoint after 1 year, 2 years, what will be the foreign exchange rate. If you know those rates, you can start investing today. And various algorithms, fundamental technical analysis are there where you can forecast after 10 years. Can anybody tell? No, no, it is not possible. No one can tell here. Uh, if you put your money in the stock market, your money will certainly get doubled. Let me tell you, I can even guarantee it. I can even guarantee it. Yes, it can get doubled. It can get doubled, but it may take some time. The money will, just like our honorable prime minister says, our economy will be $5 trillion economy. $5 trillion economy. Don't you think so? Naturally, we are moving towards that. Today, the news is that next year the government is going to set up an export target of $500 billion. Now, $500 billion is the natural target because already we have surpassed $450 billion last financial year. So, although pandemic is there, but we have already surpassed, we have already touched $400 billion of foreign exchange, this export. So $500 billion. So if I can, that is a natural target. After that is the natural target. If our economy is 3 trillion in next 3 4 years, it will touch $5 trillion. So whenever we set a target of investment, we you take any company which is having good fundamentals, your money will get doubled. Where we talk fluctuations in the short run. In the long run, every market appreciates, whether it is bullion market, commodity market, stock market, foreign exchange market. You compare just 70 years back, 1 rupee was equal to $1. Down the line, in 75 years, the Indian currency depreciated by 75 times. Now it is 75 rupees. Before 30 years, the stock exchange was 2000. That is 1990, before Harshad Mehta came. And now it is 60,000. So in 30 years, it has grown by 30 times. The gold prices before 30 years, they were 2000 rupees, and now they are almost 50,000. So they have grown. So where is not appreciation? Appreciation is there. The reason for that is we are the reason. We are the reason for appreciation. It is not the government, it is not the regulatory bodies, it is we, because we are demanding more. And why we are demanding more? Because we are increasing day by day. Why we are increasing day by day? Because every year our population is adding in Australia. Every 10 years our population is adding a Brazil in ourselves. So it's we who have to be blamed, not anybody else. If we continue to grow like this, then of course the prices of everything will increase. And if you want to stagnate, if you want to control these prices, then we need to, of course, that is not in our hand, that is in the God hand. Almighty has to control the population, that we think, na. So that's the thing. Now the momentum which we got, that is responsible for this. So, and investment is there, then the earnings. Now when we talk of these functional innovations, finance innovations, now coming down to the some general finance innovations, next slide is there. Deregulation of international financial markets. Deregulation, as I said, means it was not regulated. Can international financial market be regulated by a country? Is US so powerful that it can regulate? No. Deregulation means the countries, they are now easing out the regulations, easing out, and a time will come that it might be possible euro may be the currency of the world, or dollar may be the currency of the world. Even Indian currency can be the currency of the world. It may be, and that currency will be called as digital currency, not the currency or printed by or regulated by any specific country. Any specific country. So when we are talking of these digital currencies or the regulations, no one can regulate the flow of information through digital media. It is very important. Just understand, you can curb it, you can penalize it, but you can stop it, but the flow will be there. Flow is there, flow is natural. So with the deregulation, many companies of India, though they are going abroad, foreign companies are coming in India for getting funds or for investment purpose. That's why you see so much of foreign direct investment has grown in last 60-70 years. Can you imagine, there are 36,000 multinational companies, those who have opened offices in India, or branch offices, or they have established their manufacturing facilities. Either they are doing business through franchisees or through licensings. So many foreign companies have entered in India now because of what? Deregulation in the market, whether it is financial sector or it is investment, anything you talk of. Now the deregulation has also resulted in one very important thing. It is convergence. It is what we call contagion effect. It has led to the integration of world financial markets. World financial markets, they are closely knitted. You see the result of this pandemic. Initially, it started in China. China, China, little bit unique name. China is a country which I very much appreciate and admire. It is you may differ from me, but I like China very much. China is like anything. Made in China. One time we used to hate it, but you hate it or you do something, but everybody is having something China. Everybody is starting from top to bottom. We are having something China. So we can talk no hours and hours blaming China, but China is everywhere. So China started, then coming down to US. And when you see the interlinkages like New York Stock Exchange or Luxembourg stock, there are more than 50 companies. Can you imagine, from India, those who have listed their shares in the Luxembourg Stock Exchange, they have raised funds from Luxembourg, a small country. Even its area is not equal to Varanasi. Varanasi is a small city, population of 15 lakhs. Luxembourg, I think the population may be even less than Luxembourg. I may be factually incorrect. Please check it. Okay. 50 companies of India, they have raised funds from Luxembourg, although its GDP is $400 billion. $400 billion means double the GDP of, almost double the GDP of Uttar Pradesh. So Luxembourg is there, London. So all these stock markets were closely knitted, and suddenly one stock market crashed. Now those game of cards which we said, one card goes out and the whole palace goes down. So one market, something happened, and it was having a contagion effect in all other markets. Every market was destroyed, and our market was nothing special about it. So it also got affected and went down, and then there was a recovery. Why recovery? Because we are responsible for it. We have no other option to put our money in the stock market for, with the twist of getting more return, higher return. So That is the one thing. Then crowdfunding. What is crowdfunding? Crowdfunding is very important concept which has emerged in last so many years with the onslaught of internet. You may be seeing people, they are coming on, net, on various platforms, asking for donations, asking for NGO money and all these things. So they are outside the money. Small contributions, they make up a huge amount. So many companies are there, many startups are there which are resorting to crowdfunding platforms. They are largely responsible for what we call as deregulated market. Crowdfunding, can you regulate it? If I ask, there are 60 friends, I have created an app where I have added 60 friends and I just want money from each one of them, can RBI come and control it? Now this 60, you multiply it by 1 crore, you get 60 crore. Can central bank come and control it? No. It's a crowdfunding. It's another platform of getting and raising funds, and at a cost which I will decide, which no one else can decide. Now, so that is one thing which we are seeing. Then shadow banking, the unorganized sector of banking, now it has been given a new name, shadow banking. It's a very lucrative name, very, what we call adorable name. Shadow banking means the banking which normal banking is there, retail banking, accepting and disbursement of the deposits, but outside the regulation. So we want to free away our hands and fly high in the sky. Why? Because we don't have, nobody likes the regulation. Nobody likes regulation, and this is the world of free regulation. This just broke away all the regulations. So shadow banking is one of the example, like unorganized. But there are so many problems of it also, because the indigenous money lenders, they used to exploit it. But it's up to you. Now, if I want to do something, I want to lend, I want to accept deposits unofficially, that is outside the ambit, because normal banking channels, they are directly involved with. So they are regulated by RBI. So as I say, they are required to be controlled, because there are many NBFCs, those who were cheated persons earlier. But I think with the convergence of technology, it may not be that possible, that to that extent. That yes, financial inclusion, the buzzword which we have started listening in last 8 years or so. Yes, uh, at least I have not heard about this word 10-15 years back. Financial inclusion include those who have excluded from the financial system. And with the onslaught of technology, with no frill accounts, and and various other schemes, government, no, I will not call them as innovative schemes. You open the bank account without accepting deposits and so on. But it's the technology which has helped. Now bank is your doors, bank is at your doors. Can you imagine? Know your consumers can be there. NYKYC, what we call know your consumers or client, through your mobile phone. Mobile phone. Now we are using this mobile phone. Earlier, 20 years back, 10 years back, we used to go to a bank branch with lot of documents. So this is my this document. These are my two photographs. This is my a photocopy of my inter mark sheet. This is my high school mark sheet. You don't got it attested from your principal. Go and attest it from your some gazetted officer, and then we will accept it. You have not brought the copy of passport. So much complexities were involved in opening a bank account when you used to visit. And you cannot blame the system that time. You cannot blame the system. It was the requirement of the time. It was the requirement of the time, that before 10 years, when we were having thousands of bank branches. Can you imagine when computers, when core banking solution was not used, was not applied, when Infosys does not develop Finacle, how difficult it was for branches to handle the clients. Of course, the number of clients who were visiting banks, they were also less. But it was all manual. So many ledgers have to be prepared. So many journal entries have to be done every day. If you have to take out money from the bank, it was almost a project of one full day. Today I'm going to a bank. I'm going to a bank. You used to say I am going to a bank. If you have any work, in the meantime, I can do. So people used to go, sir, please take my check, please take it. You will be in the queue for an hour. And then the counter cashier used to say, I will accept only one check. So that thing was there. And now, sir, you open your account, open the self camera, what we call selfie camera, take a snap. You upload your Aadhaar card, you upload your PAN card, your account is open. Deposit money, sir. Deposit money, start earning money. deposited. So know your, don't you think this is one of the biggest innovations we have seen in case of banking industry in last so many years, and it has brought most of the unbanked population within the ambit of what we call the within the ambit of banking channels, formal banking channels. And these those who were earlier not in part of banking channels, part of indigenous money market, and they were thrown on the virtues of exploiters. They used to exploit them as high as the interest of 30%, 20%. Now it is the era of customer choice. It is the era of where client is the king. And these new tech industries, they can dream anything new, these new, and this has transformed industries such as entertainment, accommodation, music, transportation. Everything is transformed. I'm now nowadays I am watching this OTT platform. I've started searching information about OTT. Now the movies are what we call launched on OTT platform. They are made for OTT platforms. Even I can make a movie on this platform. So see how decentralized the system has become. So it is not, earlier it was owning the things. Now it is using the things. You use it for, it become part of decentralized system. Earlier, uh, don't now people don't have any stock of the things. Now they have the uses of the thing. So and these banking channels, as I said, how if you have you visited bank branch or not? Do you think that bank is an evil or not? As I said, in last so many years, I think we would have visited more number of times to our dentist rather than our bank branches. uh, we used to visit bank branches when either when there is a problem, when we or we need to go for some kind of KYC. Now these public sector banks, they are little bit moving out of that. They have not offered these mobile, private banks, but that outdated old infrastructure in retail banking where brick and mortar model was there. Now these ATMs, don't you think this is one of the biggest innovation in banking channels? These innovations which have taken place in last so many years. I think the positive mindset towards innovation is the establishment of these ATMs. And if these ATMs, now you can do any transaction in these ATMs. You can do any transaction in these ATMs, and people feel that they are controlling their transaction. We feel
Sir,
that we are
sorry to
controlling the
interrupt.
transactions. And if we control the
I,
transactions, it means we are empowered. We are
Professor
empowered.
Gautam,
And this is the time of empowerment. And if we are, empowered, then we feel ecstatic. And this is the time, when we say that, there is life has become paperless. Life has become faceless also, because it's not paperless, it is contactless. It is contactless. Yes, the banks don't want to see their clients to visit their branch. We also don't want to go there. And even companies, they don't want to see us. They don't want to see us. Faceless offices are there. They want, no, it is all result oriented. If you are achieving the result, we don't want to see you. As long as and you go and have vacations in Hawaii, as long as you achieve our targets, that is not a problem. And so because of this, you can blame the government. You can blame the government, that government has, reducing jobs and all these, but altogether new kinds of jobs they have emerged. And if you see the number of bank branches, as I told earlier, they have reduced down by 50%. And you have not even counted it. Even my bank, SBI, State Bank of India, I have opened State Bank of India with one branch. Then it merged with another branch. It merged with another near branch. So I visited to the branch manager. I asked, see, I have opened this branch with the bank, my account with this branch, because this is close to my house. And he responded, said, what's the problem? You are coming after 2 years, so you stay at home. Then the second branch was merged with third branch. There was branch with Kamacha. Kamacha is a location in Varanasi. Then it merged with Bhelupura. Then Bhelupura merged with Gurudham. So see, the number of bank branches have gone down. In fact, in my case, it is one third. So you are not able to see that, not able to see that. And how many times, the bank has able to reduce down its physical infrastructure, and how much time it takes for an outsider to open a bank account. It's hardly a few minutes. It's the case of few minutes. And how it is possible, you can say, sir, how it is possible for banks to manage this huge data, humongous data, like, every day, so much of data is created. So it's a don't you think it's a cloud computing has came to help. So many companies are there, IBM cloud computing, now Microsoft cloud computing. Now there the data is stored. Earlier, when you have created an office, or like, you are maintaining the record of individuals in one laptop, so you are having definite memory. Your business increased, so you managed 10 workstations, 10 computers. And then, how it is possible, you have to appoint then a separate technical team who can take care of it. And apart from that, it will consume so much of time and cost and expense to maintain that much of technical infrastructure. So what happened? Cloud computing came. So you leave that job of processing of data, of maintenance of the data, of storage of the data to cloud computers. You leave onto them. They will maintain that, and they will charge a nominal fee out of it. And they will charge, their fee will be proportional to the extent of your usage of that data, how much of your data you are using from them. You can use. And can you imagine, you can think of that, every day the data is getting doubled, quadrupled, or 4 5 times, but actually the amount of information which is stored to them for your firm, it may not be even more than the space occupied by a movie in your laptop. It may not be even that. Those are only known by, account numbers. The transactions are known by only account numbers. You don't need to save the Aadhaar card, PAN card. When account number is being encrypted, then what is the need for getting all these information? So account number, so you can store millions of information through cloud computing. And then emergence of, digital currency, which is now one of my favorite area to talk of. And I will suggest you
Sorry to
to
stop you.
just I will
Gautam.
request you to put some of your money in as digital wallet also. Like, Bitcoin is there. Of course, in 2008 it started with 100 rupees. Now in 2010 the price was 100 rupees. Now it has gone up to 30 lakh rupees. And when Elon Musk said that, the Tesla is going to accept Bitcoins, the price of this Bitcoin increased to $60,000. And now, and after certain time, after 1 year, he said now Bitcoin will not be accepted. So the price went down to 30,000. So of course, this is speculative, but these digital currencies, they are empowering everyone. You can say how it is happening, how it is, because there may be duplicacy kind of thing, but encryption is making, the blockchain technology is making the system foolproof. That's why this is successful. I am not having the time to give you all explanation of blockchain or encryption of technology, which these fintech companies which are using, and there are so many. It's not only Bitcoin. There are so many, currencies have evolved with the passage of time. Cryptocurrencies which have decentralized. Now I am the owner of my currency. I am the owner, and I can decide at what rate I should give you, and at what time I should give you, why I should be charged. If we put money in the bank, they give us 2% rate of interest, or some regulatory framework is there. RBI says, okay, if you want to take money, you have to pay this much of interest rate. But in case of cryptocurrencies, if I am paying something to some other person, and that amount, that currency is transferred from my account to that account, and this is known to the whole system who are the part of cryptocurrency, and they are managed by miners. So there is a little chance. I think there is almost, it is foolproof, because it is backed by, codings which we call as cryptography, and that is almost safe, as safe you can think of any other instrument. If that is not safe, then banks are not safe, RBI is not safe, anyone is not safe. And Supreme Court has also removed what restriction RBI has put it on cryptocurrency, use of cryptocurrencies. And I will ask everybody to at least purchase cryptocurrencies of even 100 rupees. You can purchase now. Even when you download the Kuber app, they even offer 50 rupee as complimentary. As you go in US, you go to Atlantic City or Las Vegas, they offer you $20 to gamble. Similarly, nowadays these apps, they're offering you 50 rupees, 100 rupees complimentary to go for cryptocurrencies like Bitcoin or Libra, or there's many other currencies. That emergence of fintech companies. Now, fintech is, I think, one of the biggest innovations which are taking place, which is bringing, the creation of money, the transfer of money, the solution to the problem of money. These fintech companies are coming up. Earlier, when we used to transfer money from one account to other, we used to get 3%, 4% charge of it. We need to pay charges on it. But why we should pay it? Why we should pay it? So fintech companies are there. You just give them the issues. They will make platforms for you. They will that those platforms will be encrypted, and ultimately what will happen, that your money will get transferred without any cost, without any cost. So it's nobody else should decide the future of my company or my firm. It's me who should decide. It's me who should decide the money. No, ultimately, if I'm saying that this is money and for me, and if this is accepted as money for others, it should be the money. It should not be regulator which has to decide that money is there. And you see, another very important innovation which has emerged in international markets is financial market is the emergence of chatbot. You see, with the emergence of chatbot, 70% of the financial problems of individuals, they are solved immediately. And there is a result. We have conducted a survey of this. So 70%, on the basis of that, I'm saying 70% of the queries or problems, financial issues, they are resolved through chatbots. They are resolved through chatbots. And with the emergence of these fintech companies, now they are changing the whole face of financial scenario. You can We can take a loan in cryptocurrencies. We can extend loan in cryptocurrencies. In India, you will not find much the use of cryptocurrencies. In US, you may find there are one or two shops which may be accepting bitcoins. But in Japan, ultimately this is the Japanese market from where cryptocurrencies came, evolved. You may doubt it, the sanctity of this statement, whether it has been evolved in Japan, because till now exactly it is not sure that who started this cryptocurrency back in 2008. But Japanese government has accepted cryptocurrency as a mode of legal. It has legalized the payment. That's why the market of cryptocurrency has emerged a lot. And Russia is planning to also have laws on cryptocurrencies, so that the payment, and in India also slowly and gradually, because it is not possible for the government to every time resort to its regulatory system, the old Indian currency, old Indian banking infrastructure, to provide services to each and every potential Indian citizen. We are growing, just like I said earlier, every year we add up in Australia in our population. So we are now almost 1.5 billion people. So is it possible to provide in? So cryptocurrency it empowers. The system is foolproof. Even but there are so many institutions which are working against the what we call this adoption of this cryptocurrency, like stock market. Stock market is speculative market. Cryptocurrency is a speculative thing. Just like when Elon Musk said that we are going to accept payment through cryptocurrency, the prices went up to $60,000. When he said no, this is not going to be the Tesla is not going to accept payment, the prices fell down to 30,000. But there is no problem of security. Duplicacy is not there. The decline in the value is not there. It is it is the owner of the cryptocurrency who decides it, that whom to give and how to give. And there is a real-time assessment of the money. There is no depreciation in the money, and it is the actual demand or supply which decides the value. So there is no any malfunctioning in that, because there are miners who earn their money out of in the name of bitcoins. So this has, I think this has a lot potential to change the financial landscape of our country, of not our country, the whole world. And I think in near future to come, there is a great challenge to Indian regulatory system, and not the regulatory system of only in India, but all across the world. The regulatory systems, they have to change themselves. Their role has to be changed. And what is happening, that if regulatory system is going to go away, I think the the expense will go away. The people will be decentralized. And see, don't ask question about sanctity of the cryptography. It's a different discipline. It's a different discipline, and it is going to stay here. This is the buzz of the time. And when I say that decentralization of money
Mr.
is going to
Gautam,
take place, decentralized of money is going to
Mr.
take place.
Gautam, sorry
And when
to
I say decentralization of money is going to take place, it means it is going to stay here for a very long period of time. And you can see it as challenge in front of central banking of all countries all across the world, which I say. So evolution of fintech companies, or you talk of cryptography, you talk of anything which is there, which we are seeing. And another very important thing which was I was missing, account aggregator. Can you imagine RBI, IRDA, SEBI, they are working together to evolve a system so that they can impose they can be a single regulatory system where you are having a unique ID. You will be known by that ID. Like you are trading in shares, you are holding money, RBI is coming, you are holding insurance policy, different regulators are there. No, there should be only one regulator. So so that system is being under evolution. We call it as account aggregator program. So that is coming. So see, we can talk hours and hours, but this innovation, because innovation is an ever happening thing. It never stops. Every time innovation, because it comes from our entire need to improve, to get more, to change. And that, I think, they all are brother and sisters of innovation. As somebody said, necessity is the mother of invention. Similarly, these are brother and sister of innovation. So innovation is taking place. We cannot say innovation has started. Innovation is already there with the evolution of mankind, and those who are going to change through the life, they will be part of the innovative system, or they may have the risk to leave out. Thank you all.
thank you so much, sir. Professor Gautam, it was very enlightening and enriching session. Uh, we were, we have actually crossed the time limit. So, will you take some questions?
Yes, sure, sir.
You like to
Sure.
have some questions? Yeah, please participant go through one or two questions, not more than that, since we are extending the time.
Please raise your hand, participant, so that we can bring you to the stage.
May I proceed, sir?
Yes, please proceed.
Good afternoon, sir. It is an excellent class presentation. In the being of, I say, in innovative, you can see in television, Sony also there is Shark Tank India program is going. All these invested like Asin Grover, Aman Gupta, Piyush Bansal, they are investing, sir. They are taking, if our project is, they are satisfied with the innovative idea, business module, they are taking they are investing. So example, one company taken, sir, example says 75 lakhs for 16% equity. That means what is this equity? Means, sir, they will take the 16% benefit, all this from the revenue?
No, 60% equity.
Yeah. Suppose the example Piyush Bansal is interested on one project. Okay. And they are ready to invest 75 lakh rupees for 16% equity. That means whatever the revenue generate for that business, they will take the 16% profit, or what is that? I don't know. Actually, I'm not from financial background.
So it is the share. See, if I am owning 60% of the company, shares means ownership. Share, the basic definition of share is unit of ownership. So if I'm owning 60% of the company, what Piyush Goyal is saying, so it means part of the profit. So what if 100 rupees the profit, 60% of the profit will be kept by Piyush Goyal and 40% of the profit will go to the promoter or owner of the firm. Now, if 16% is the owner, Mr. Piyush Goyal, so the thing is that there is a chance that the firm will belong to Mr. Piyush Goyal because it is more than 50%. So I think it is 16%, 16%, 75 lakhs you are saying. So he has to be a minority owner or the firm will belong to Piyush Goyal. So it is majorly the part in the profit. Apart from that, in the light of when company closes down, when company is winded up because of losses, then the share in the assets of the company of Piyush Goyal will be to the extent of his investment in the company, that is 16%.
Thank you, sir.
Hello, sir.
Yeah.
Sir, why cryptocurrency is not legalized to that extent when compared to the Western countries in India, sir?
Okay, very nice question. Why it is not legalized? In fact, the government has was planning to not accept it. I think last year, but Supreme Court has passed a judgment where it has removed that restriction, that regulation of government that it should not be used. So Supreme Court has given a green signal to it. But slowly and gradually, it is not in much practice. But see, regulations are framed with when it becomes a thing of masses. Regulations are not for those things which have not become in which have not been in practice. But yes, regulations, because that is the demand of the time, because they think I don't know you're exactly who has asked the question, but I think the government is eyeing the future. They see that they are preparing themselves for the change. They want some time. They want their regulators to prepare themselves, because the day cryptocurrencies will come and people will start having confidence onto them with the passage of time. I said in my presentation also that gone will be the days of regulators. So they are preparing for them. It is going to be popular in India, but it will take some time. Even internet, it took 10 years for to start in India. In 1990s it started, but in 2000 it became popular in India. So just wait for a few years, 2, 3, 4 years, you will see cryptocurrency, everything will be there in India.
I think we'll propose vote of thanks. Vishal?
Uh, thank you, sir. It was a great pleasure to listen to your voice words and learn from them, as you have already answered the query of participants during the session. Now I take the opportunity to thank you on the behalf of the entire institute and participants who were captivated throughout the session. We are grateful to you for giving insights regarding the critical success factors in innovation management. The session was very informative and engaging. We sincerely appreciate you taking time from your schedule to provide us with such valuable information. Thank you, sir.
One more
Thank you all. Thank
remark
you
I want
everyone
to make
for
you,
patience
Professor
listening.
Gautam sir. We have excellent response from the participants, and they also looking for your second session also. So we'll talk
Mhm.
on that behalf if time permits and we have that opportunity. We'll also like you to invite for the second session, uh, most probably. So thank you so much, and we had
My
a
pleasure.
very nice session. The participants were very satisfied, and they had given a lot of comments also in the comment session. I'm happy to share that. People are saying excellent session, nice session, knowledgeable session. So we are getting a lot of responses. I hope this will continue in future also. And if I'm looking at that, if I will able to manage one more session for you. So thank you so much for taking time for this session.
Thank you, sir.
Thank you so
Thank
much.
you.
Thank
Thank you, sir. So I'm leaving out.
you. Okay, thank you, sir. Yes, dear participants, I think we have crossed the time of 12. So we'll be joining at 12:20 for the second session. Thank you, everyone.